Investors, hello. This is AI Crypto Insights channel, where you get a few minutes of AI-powered insight into the market. Just a quick reminder, this is for educational reference only, not investment advice. Okay, so today we are digging into a really interesting article from Cointelegraph by Nate Kostar. It's all about Grayscale declaring the first ever staking payout for a US Ethereum ETP. This is a big one. So let me just ask you something right off the bat. We all think of ETFs as a way to track the price of an asset, right? You buy it, you hope the price goes up. But what if your ETF could do more than that? I mean, what if it could actually pay you? Like send cash right back to you, kind of like a dividend from a stock. Well, that idea? It's not hypothetical anymore. Boom. It just became a reality. Grayscale has officially made the first move. And let me tell you, this is a move that could completely change the game for all of us crypto investors. All right, let's get into section 1, Grayscale's historic payout. And I'm not exaggerating when I say historic. This is not just another piece of market news. No, this is a genuine milestone. We're talking about the very first cash payout from on-chain staking for any US crypto fund, ever. So what are we talking about here in terms of actual numbers? Well, shareholders of the Grayscale Ethereum Trust, that's ticker ETH, they're getting about 8 cents per share. And I know what you're thinking, 8 cents? That doesn't sound like a lot, right? But hang on. Forget the amount for a second. The precedent this sets, oh man, it's absolutely enormous. So here's the breakdown of how this whole thing works. Grayscale actually started staking its ETH back on October 6th. But here's the key part. They're not paying investors back in more ETH. Instead, they're taking those rewards, converting them into good old US dollars, and then distributing that cash. It's designed to feel exactly like a traditional stock dividend. Pretty cool, right? Okay, so this probably has you wondering, right? How can an ETF, which is really just supposed to hold an asset, suddenly start generating income out of thin air? That's a great question. So let's pull back the curtain and break down the mechanics of how this all works. You know, at its heart, staking is really simple. It's all about helping out the network. On a blockchain like Ethereum, which uses proof of stake, you can lock up your crypto to help confirm that all the transactions are legit. Think of it like you're helping provide security for the network. And for doing that job, the network pays you rewards. It's the blockchain's built-in way to generate a little extra income. And here's the best part for you, the investor. You don't have to lift a finger. Grayscale takes care of all the complicated technical stuff, staking the ETH through their big institutional partners. The Ethereum network then does its thing and generates rewards. Grayscale then sells those rewards for cash, and that cash just shows up in your account. It's totally passive income. You literally do nothing. Okay, let's zoom out for a second and look at the big picture, because Grayscale didn't just do this in a vacuum. What we're seeing here is the first shot being fired in what is shaping up to be a massive race for rewards. The entire competitive landscape is heating up, and fast. Yep, you can think of it like this. Grayscale just fired the starting gun. By being the first one to actually deliver a cash payout from staking, they've basically thrown down the gauntlet to every other ETH provider out there. The race isn't just about offering ETH anymore. Now it's about who can offer the best yield on that ETH. And believe me, the competition is fierce. We're not talking about small players here. We are talking about the absolute titans of finance. You've got BlackRock, they've already registered a staked Ethereum ETF. You've got Fidelity filing for rule change to add staking, and 21 Shares is doing the same. They all see it. They know this is the next big battle. And the stakes, they couldn't be higher. We're talking about a market that's already worth $18 billion. That is a massive pie. And right now, it seems like offering these staking rewards is going to be the #1 strategy for grabbing the biggest slice. So if you look at the current leaderboard, yeah, BlackRock's iShares fund is the giant in the room, with over $11 billion in assets. But look at Grayscale. They've got 2 funds in the top 3. And now they've just secured this massive first mover advantage by actually delivering a payout. So the huge question now is, what's BlackRock's next move? How are they, and everyone else, going to respond? Okay, so we've talked about the companies, the market, the mechanics, but let's bring it all back home. Let's talk about what really matters. What does this mean for your portfolio? Why should you care about any of this? Here's the absolute bottom line. Think about the evolution here. A standard, old-school ETF, it just gives you exposure to the price. Simple. Price goes up, you're happy. Price goes down, you're not. But a staking ETH ETF, that adds a whole new layer to the game. You still get the price exposure, but you also get a passive income stream on top of it. Your asset isn't just sitting there anymore, it's actively working for you, earning rewards, no matter what the price is doing on any given day. So, what we're witnessing isn't just some new feature getting bolted on. No, this is the beginning of a whole new era for crypto ETFs. They're changing, they're evolving from just being tools for speculating on price into actual instruments that can generate real, sustainable yield. They're growing up, and frankly, they're becoming a lot more useful. And that leads us to the final, huge question we have to ask ourselves. Now that the cat's out of the bag, is this going to become the new normal? Will investors like you start to expect this from every crypto fund? I mean, could staking rewards become the new standard, the absolute baseline for any ETF that wants to compete? So here's the AI Analyst Verdict. Grayscale's move is a total game changer, transforming ETH ETFs from simple price trackers into potential income-generating assets. This has officially fired the starting gun on a whole new race for investor rewards. What do you think? Share your thoughts in the comments. We'll see you next episode.